The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. This is James Lien, Insurance Agency Marketing in Omaha, Nebraska. We still have a minute to go. I do have Gary on the line with Baltimore Life, who will be coming in shortly to go ahead and present the Baltimore Life Single Premium Life product. So, like I said, we just have about one more minute to go here. All right, everybody. Again, James Lien, Insurance Agency Marketing, Omaha, Nebraska. Thank you for joining us this morning. I will go ahead and start off the webinar, and then I will hand off to Gary with Baltimore Life. Want to go ahead and just start out by telling you a little bit about IAMS. And again, thank you for joining our webinar. First thing I want to do is talk about our referred producer program. Some of you that have been with us a while, or maybe this is your first time, obviously you can take advantage of this. Whenever you refer an agent to us, you get $50 for referring that individual once they contract, and then you get $100 or more when they submit business within the first 30 days with us. So nice incentive. And then as that producer continues to produce business with us, you'll continue to receive 20 basis points on business that's written by them. So for an example, if you have 3 individuals that you refer over for $1 million, that equals $6,000 cash for you just by helping somebody else in the business further their career. Some other incentives, we do have our new producer builders. These are for individuals that complete these levels within the first 180 days of their contracting. So the first is a $100,000 level, which is very achievable, especially with single premium life cases. $100,000 is a very regular amount of premium that's going in to fund these cases. So $100,000 level will get you one of 3 options: a $750 cash bonus, a 2-year producer website. In other words, we host and help maintain your website. Or third option is the iPad. Next level is the $300,000. That'll get you the Social Security program, which is a 3,000 piece mailing, as well as the actual program itself, or a $1,500 Visa gift card. And then the $500,000 level will get you a 5,000 piece mailing and seminar coaching with Matt Gill as one option, a 4,000 piece mailing and seminar coaching with Dave Pimper. Or if you want to take a vacation on us, you've got the Ritz-Carlton travel package. A little bit about what we provide to you as the producer, mainly in our back office support. Our goal is to make your job easier and save you time so you can be more effective and productive out in the field. So what we have is tools to help you build your business, as well as resources to do so. We have case design assistance, forms at your fingertips. We support you everywhere from the submission to the commission standpoint. We'll assist you with all the life and annuity quotes. You can rely on our top sales experience and coaching from all of us here at IAMS and the marketing and sales and support side, as well as we do have paperless contracting available, saving you time and money. So you can actually get appointed in most states that same day while you're taking the application. A little bit about our creative marketing. You may or may not know we have a whole team that's that's dedicated to marketing and working with our agents. What they can do is help produce ready-to-print, customized brochures, handouts, flyers, postcards, newsletters with your agency information on there. They can also help with logo design, business cards, brochures, stationery advertising, as well as digital solutions. Everybody these days that's in the business should have some type of online presence, personal website, things like that, doing some type of social media, email marketing, as well as online newsletters. As I said, we have a full creative marketing department designed to assist you do that. A little bit about our website. It's obviously accessible 24/7. Great sales tools on there. We do have our term quoter. Like I said, it's always accessible. If you find yourself in a situation where it's maybe after hours or on the weekends and you need a form, you can download and print any of the forms you need to transact business. There's industry links, current annuity news. We have our annuity grid out there, as well as our long-term care product guide. as well as we do have a sales resource library. There's different types of calculators out there and different additional information you might find useful. For those of you who are working more on the retirement side, we also offer a retirement analyzer that will produce, provided we get the information for your clients. We'll go ahead and assist and put that together for you and get that over for review, and then walk you through some best possible options for your clients. Wealth management is an area of our company we opened up, realizing that you as the advisors, it's easier to transact and do business with one place. In other words, your life and annuity business, as well as all your assets under management. So with IAMS Wealth Management, it's recurring revenue. They see an increase in production as well, since they're able to work with one organization, improve client retention, as well as stronger relationships with your clients. And a little bit about Life and Annuity Academy. We do have one coming up at the end of March. It will be held in Des Moines with our partner Athene. We have 3 of these each year. It's an all-expense paid trip for you, the advisor. We cover transportation costs, lodging, as well as food expenses for this event. Now, we don't produce, or sorry, we don't put this on ourselves. It's actually hosted by advisors like yourself that have been in the field, have been successful. They're talking about what they've done working with clients and how they continue to grow their business. So there's going to be sales ideas. They're going to talk through indexed annuities, annuity industry itself, a little bit about seminar systems, large life case marketing, business insurance, wealth transfer tools, as well as sales software tools. If you do have an interest in that, I'm going to put up a quick poll real quick, which you guys have already responded to. It doesn't mean you're automatically enrolling. It's just saying, hey, I'd maybe like a little more information about this opportunity. This is our marketing summit that's going to be held February 25th through 28th for our top producers. We have yet to hear what next year's location is going to be. It should be released quickly, but this one, as you can see, is going to be held in the Boulders Resort and Spa in Arizona, voted one of the best golf resorts in the Southwest. A great opportunity, 4 days, 3 nights, producer social, educational events. It was a fun time for everybody. Again, thank you for joining us. Again, my name is James Lynn with Insurance Agency Marketing. I'm going to go ahead and turn it over now to Gary with Baltimore. So, Gary, go ahead and take control.
Well, good morning, everyone. Thanks, James, very, very much for having us participate in the session today. And James, did you hit the share button?
Hold on one second. I thought you should be live right now, Gary.
All right, let's see if you can you see that?
Yep, we're good.
All right, we're good. Great. Well, again, thanks, James, and thanks to all of you participating this morning. I marvel every time that I'm involved with a webinar with IAMS about the amount of support that they provide to their agents. It's fantastic, not just on web, but when you pick up that phone and call them, the type of support they give you. As a licensed agent myself and have been for years, I really can respect the fact that you can get that level of support from a marketing organization. Thanks so much for being a great partner to us. So today we're going to be talking about hopefully a program that might be new to you, and if it's not new to you and you're already contracted, a program that hopefully you haven't stepped into yet, and we can help you a little bit. If you're already selling 1 or 2 cases, maybe you'll take away an idea or 2 with it. So we're going to be talking today about Baltimore Life's tax-efficient asset transfer program. And in this presentation today, we're going to be featuring 2 products in our portfolio, our Generation Legacy and Single Premium Whole Life product. Both of these products are really designed with your senior client in mind who have what we like to call some leave behind money. Money they don't need to live on, they simply want to leave behind to the next generation, do it in a tax-efficient way, and do it by increasing their estate value as well through a single premium product. No matter whether you're using funds coming from after-tax cash vehicles like CDs, money markets, mutual funds, or you're using annuities or qualified plan funds, one of these products is going to be able to satisfy your needs. So hopefully you'll get that out of the session today and find a place for it in your offerings with your prospects and clients. Let's talk a little bit about the marketplace. It's absolutely huge. About $1 to $3 trillion in wealth is out there right now that's being passed each and every year. So, wealth is much greater than this, but each year you're passing $1 to $3 trillion in wealth to the next generation, and that trend is expected to happen annually between now and the year 2052. We know that about 55% of your client's wealth is moving on to their family members, and about 16% of that wealth is moving on to their favorite charities. So yes, 71% of your client's wealth is moving on to people and organizations they know and love. The question is, are they maximizing the amount of money they're able to pass along, and are they really doing it in the most tax-efficient way? Well, the first product we'll talk about as a solution to that need is our Generation Legacy product. And this product is designed to take money not needed from daily living that originates from annuities and other qualified plan funds, such as 401ks, IRAs, 403bs, and the like. Obviously, the client has the goal of passing money along efficiently through the use of life insurance, increasing their estate value through the single premium concept. The issue ages are 60 through age 80, and our product allows you to write a single application, and as a result of that single app being written, we issue two products: a single premium immediate annuity that receives the transfer of funds, as well as a limited premium payment whole life product. Once issued, by writing that single app, both of these products combine to work seamlessly together. Baltimore Life does all the administration behind the scenes, provides you and your client with all the benefits that you've purchased. We have simplified underwriting we'll talk about through 4 tables, as well as our accelerated death benefit rider. So what about this qualified market? It's about $2.7 trillion strong in in-force deferred annuities out there right now. About 65% of that money's tied up in tax-qualified employer plans. And if you, like me and others, are relying on your 401ks and your IRAs over time to generate income, that money's out there. People are going to look for ways to distribute the funds. So in addition to what we're talking about today, great opportunities to help them with ideas of distributing funds through SPIA products and such. But, a lot of people will have more money in their qualified plans that they're not planning to do anything with in terms of income, and they will simply want to create a legacy, and that's where our product can fit in. Then you have that 35% of that $2.7 trillion that's in those non-qualified deferred annuities. We've been in a low interest rate environment for a very long period of time, and people buy annuities, as you know, for a way to buy a higher interest rate possibly, because it's longer term commitments on the money. They're doing it tax deferred, but they're buying it primarily for a growth vehicle. They really aren't intending to use it as an income vehicle, that third leg of the stool, so to speak. So, what happens to that annuity when it grows over time, and eventually, you hit the RMD period, and then eventually you die? Well, it's probably not the best product to die with if your only plan is to pass the money along. So we'll talk about that. As I mentioned, a significant share of your clients who have these annuity products primarily are, simply passing the money to the next generation. So at 70 and a half, if they have that annuity, they're going to have an RMD requirement kick in to take some type of distribution. And then, of course, if they hold the money out until they die, again, that was their intent anyway, to pass it along, they're simply going to be passing the tax on the gain on that annuity to the next generation, which is in a higher tax bracket more than likely. So we know annuities are great products. There's absolutely no discounting that. But is it really the best product to die with if you know the intent of the money is to pass it to the next generation? Well, conceptually, let's think of Generation Legacy as a gift your client's going to be passing along to the next generation. And inside that gift box, you're going to help facilitate the transfer of funds from an annuity or a qualified plan into that gift box. By writing a single app again, we're going to issue 2 products: a single premium immediate annuity that will receive the transfer of the funds, along with a limited premium payment whole life product. Over a period of either 7 or 10 years, depending on the issue age of the client, we will make annual premium payments. Baltimore Life will make annual premium payments automatically from that SPIA to pay premiums on the life product until it becomes paid up. What dictates that pattern of payment. It's the issue age. So if the client's 60 to 74, we'll issue a 10-year payout on the SPIA along with a 10-year paid-up life product. 75 to 80-year-olds, we'll issue a 7-year payout on the SPIA along with a 7-year paid-up life product. But what happens if death occurs during the period of time while that SPIA is annually funding the life product? Well, we know the life insurance product will always pay an income tax-free death benefit that's greater than the single premium paid. But with our product, very competitive advantage is that the clients, their beneficiary is also going to receive any remaining payments from that SPIA not used to fund the life insurance. So if you're 2 years into a 10-year payment stream and the client dies after 2 years, 8 more years of payments are going to be made to the named beneficiary or a commuted value of that. We'll talk more about distribution on that later. So at the end of the 7 or 10-year period, the gift box is complete, the SPIA goes away, it's done its job, and that life insurance policy is now paid up. It continues to provide an income tax-free death benefit greater than the single premium paid. It continues to build cash value on a tax-deferred basis. And yes, it also continues to offer the accelerated death benefit riders we'll be talking about. So the issue age is 60 through 80 again, and we base our pricing on current age or age at last birthday. Now, the reason this is important is because you're going to be dealing with the transfer of funds from other products and institutions. And that transfer process may take 20 to 30 days, let's say. We're going to issue the policy based on the age the client is the day we receive the funds. Now, the minimum premium to get this started is only $5,000. How many clients do you have out there who have multiple annuities and, you know, their only goal with the money on some of them is simply to pass the money along to the next generation? Excellent prospects for this product. I will tell you that the average premium we see for this product is about $60,000 to $65,000. The maximum face amount that we'll issue on the life product based on the single premium paid is $450,000. Now, we do have 2 underwriting classes, non-tobacco and tobacco, and within those underwriting classes, through a simplified underwriting process, we will issue any risk standard through Table 4. Cash values do accumulate in the life insurance product on a non-participating basis, so there's a guaranteed cash value there. Partial surrenders. You could take partial surrenders from the life insurance policy cash value after the life policy is being paid up, 7 or 10 years. Loans, though, are available at any time from the available cash at a maximum rate of 8%. So now let's talk about those accelerated death benefit riders, because truly they can be a living benefit at a time when it's needed most for a client at end of life. And, you know, let's not push away the idea of a long-term care policy. If the client really is looking for all the benefits of long-term care insurance, they buy a long-term care policy. But most seniors aren't in a position to pay for and afford long-term care insurance. So isn't it nice to know that you can accelerate the life insurance death benefits with such a rider? There are 3 health event triggers that will allow your client to accelerate the life insurance benefit where these riders are attached. They are terminal illness, confinement to a qualified nursing home facility, and in situations of extended care, home health care, and adult daycare. Obviously, this is increasing the liquidity of the face amount, and upon the decision to accelerate, which can happen anytime after issue, a lien for the amount of money taken will accumulate at an annual interest rate of 8%, and it would be deducted from the death benefit. We'll talk more about the lien process in a moment. The maximum that you can accelerate is $250,000. The minimum is $5,000. But here's the good news. This benefit is paid out once, and it's paid out in a lump sum, and these are unrestricted funds. The money can be used for whatever reason they deem needed. Now let's take a look at the definitions of these triggers and the payouts that are associated. So for terminal illness, simply put, the client needs to be diagnosed by their doctor as terminally ill with a life expectancy of 12 months or less. In this case, they could take a maximum acceleration of 75%. The second rider covers both qualified nursing and extended care, and in either situation, they can accelerate at 50% as a maximum. To qualify for the nursing home confinement, they need to be diagnosed as chronically ill, confined to a nursing home continuously for 90 days, but with the expectation of a permanent confinement. For extended care, again, same chronic illness is going on. It's been that way for 90 days, but now they're requiring care provided by either a licensed home health care agency or a licensed or state certified adult daycare center. In both situations, again, maximum accelerated rate is 50%. Now, there's about 6 or 7 states in the country, and we have this shown on our state approval charts, that have different percentages of payout. So, for example, in Pennsylvania and Indiana, the terminal illness percentage is 65% max, and for extended care and qualified nursing, it's 40%. So these riders are really designed to be able to pay cash now as a living benefit and still have remaining benefit in most cases at the client's death. So what is the definition of chronic illness as it applies to the nursing home, confinement, and extended care situations? If the client satisfies either of these definitions, we consider them to be chronically ill. The first one is they can't perform 2 out of 6 activities of daily living. If maybe they're okay on their ADLs, but they could possibly be suffering from a severe organic mental illness, such as Alzheimer's or dementia. In either case, we would consider them to be chronically ill. So let's take a look at the definition, not the definition, some examples of these payouts using the Lien approach. And this example is, we're going to assume the client's terminal. We're going to assume the face amount of the life product is $100,000. So they, anytime after issue, can trigger this event, and they can take a maximum acceleration for terminal illness at 75% or $75,000. So their lien is established at $75,000, and we add a $100 service fee for the transaction. So it's $75,100. Now, if they were to die immediately after getting that money, no time for interest to accrue on the lien, the death benefit would simply be the face amount less the lien, giving you a remaining death benefit of $24,900. But the more likely scenario is this one, and that is where after 1 year after taking that living benefit, they die. So now you have a whole year's worth of interest against that lien. So now the remaining death benefit is the face amount less the original lien plus 1 year's worth of interest, giving you a remaining life insurance benefit of $18,892. Now, this client in this example would have to live in a terminal condition 4+ years for the interest to outrun the remaining death benefit. So it's very, very unlikely that that's going to occur, right? That's why the percentages are set up the way they are. So technically, could these riders, the terminal illness rider and the one for qualified nursing and extended care, could they ever terminate from the policies? Well, if the whole life policy ends, the riders would terminate. And you might think, well, hold it, how would the whole life policy end if the SPIA is automatically making premiums each year? Well, let's say the client in year 1 gives you $100,000 and we set it up on a 10-year payment program, right? SPIA to the life product. After 2 years, they come to you and they say, you know what, I didn't think I needed all that money, but I had an emergency. I need as much back as I can get. Well, technically, you could terminate the life policy, which would end the riders, and then the remaining payments for the SPIA would be paid to that annuitant in this case. It's not a good situation to be in, but technically it could happen. Obviously, if the insured dies, we're paying a death benefit instead of the rider benefit. And finally, what if you accelerate it, let's say, under the extended care provision at 50%? You can't come back later when they're terminal and ask for 25% more. We pay out once and then the riders end. The other circumstance is, what if the lien and the interest exceed the remaining death benefit? Extremely unlikely that that would happen based on the example I gave you. But if in an odd circumstance it would happen, the owner has the right to repay all or part of the lien at any time to keep this qualified as a life contract. Keep in mind, even though you accelerate this benefit, there still is cash value in the life policy that's accumulating tax deferred. And if you're going to accelerate the benefit, you cannot also have an active policy loan. You got to have one or the other. The last thing to remember is that no matter whether you're accelerating our company's benefit or any company's similar benefit, you should always tell your client to consult with their tax advisor. So here's a quick example of a payout. Here's a female 70 who, non-tobacco user, let's say he's got 50 grand in an annuity. Based on that 50 grand, we're going to issue to on the life product a face amount of $78,000, nearly $451. So she's immediately increased her estate upon issue by $28,451. Don't forget, if she dies in the first 10 years, the remaining payments from the SPIA would also be paid. So, but as it relates to the accelerated death benefit rider, look at these cash payouts that she would receive at end of life, knowing that she might really need some funds to help with either healthcare needs, family needs, or she just wants to take a trip and enjoy the end of life that she has in this example. So beautiful cash payouts that can exist for people that, you know, really need that cash at end of life. So what's another tax advantage of this program? We feel it has to do with the transfer of funds. So no matter whether you're rolling money over from a IRA, where the money's never been taxed before, or you're bringing money over from an annuity where there's a basis and a gain, eventually Uncle Sam is going to get their tax on those gains, right? So, you know, what happens when you roll money, let's say, over from an IRA into the SPIA portion of this product? Because it's going over into a qualified IRA, SPIA that's going to pay premiums on a life product, we're able to spread tax out on that gain on the money that was rolled over a 10 or 7 year period, the same period of time that the premiums are going to be made from the SPIA to the life product. As a result, your clients, you know, the owner of the policy, in fact, will get a 1099 on the gain or the interest from that money that was rolled over, and they would have to declare that in a 1099 form for that particular year. Now, the good news is the payments we make each year from the SPIA to pay the life product, they automatically satisfy the RMD rules, so you don't have to worry about that calculation. And the other thing to remember is that we know the life insurance death benefit is income tax free, but that remaining payment on the SPIA that would be paid at death, if death came early, the portion of the money that hadn't been taxed before would be taxable to the named beneficiary. Now, the default method that named beneficiary would receive those remaining SPIA funds would be annual payments. But if the Benny says, you know what, I want a lesser commuted lump sum, we would do that instead. But again, they get the 1099 on the distribution based on the gain. Now, the application, one more thing on tax. Because we're dealing with the transfer of qualified funds, we have to ask the question on the app, do you want a withholding on the funds you're rolling over? And we have to ask the question, but the way this product has been designed, we cannot accommodate a withholding on the funds we're rolling over. So please make sure you check on the app that you do not want tax withheld from the annuity that's being rolled over. Otherwise, we have to send everything back to you. You would really also negate the ability for that client to spread the tax out over 7 or 10 years. Now let's take a look at the premiums to death benefits, and I want you to start thinking about those prospects and clients that you've talked to or will be talking to that maybe have annuities, as an example, that, you know, or have qualified funds coming at retirement that they're not going to need it all for income. They want to use part of it to pass along. Perfect prospects, right? So here's the 65-year-old with 50 grand. We're going to assume that because they're 65, we're going to have a 10-year payout on the SPIA along with the 10-year paid-up life product. For the male, the face amount, $77,361 and change. And for the female, the face amount is over $87,000. So what did you just do for this female 65? Well, you've increased her estate at issue by over $37,000, keeping in mind that if she dies in the first 10 years, the remaining payments from that SPIA would also be paid. Now, she might say to you, well, James, what if I left the money in the annuity? I'm making 3% interest and I'm in a 25% marginal tax bracket. Would I be better off? Well, it would take this lady over 19 years just to accumulate the $87,000 plus death benefit that's going to be paid at her death. So, you know, it's obviously a much better situation, keeping in mind that the life insurance is always there to be paid income tax free. Now here's the 75-year-old, little older, little shorter life expectancy, but the numbers still look good. So with that same $50,000 at 75, we're going to issue a 7-year payout on the SPIA, along with the 7-year limited premium payment whole life product. For the male, face amount $61,516 and change, and for the female, the face is over $67,000. So again, you've increased at 75 this lady's estate by over 17,000, and you've increased the gentleman's estate by nearly 12,000. Knowing that if they die in the first 7 years, the remaining payments from the SPIA would also be paid out to their named beneficiary. I can tell you this, I've been marketing this product for years, sold this product. I can tell you that clients love the concept, and once they understand the concept and you show them their numbers and they buy from you, you're going to find that you should be, of course, asking for referrals early and often, because they're going to tell their friends about this. And when their goal is just to pass money along and you've shown them a way to increase the amount they're able to pass along in a tax-efficient way, they're going to love you for it, and you should really expect to get referrals. So this ledger I'm showing you on the screen now can be, this is a screenshot of a part of our proposal software. You can actually also produce this type of a ledger right on your smartphone or smart tablet using our mobile link software, and I'll talk about that in a moment. So here's a female 70, non-tobacco, who let's say has 50 grand in an annuity with an original cost basis of 40,000. So her gain without interest is starting out at $10,000. You see in column 3 where the premium's going in, $50,000, and out of that 50 grand, we're going to make annual premiums each year from the SPIA to the life product of $5,570 in premium each year to the life product. From that premium, nearly 4,000 of it is excluded from tax, and based on the interest factor over 10 years, the estimated taxable income that she will get a 1099 on is about $1,571. The ledger at the end shows the income tax-free death benefit of $78,451, and the column to the left of it shows the commuted lump sum value of the SPIA if it were to be paid out early at her early death. So this ledger really does tell the story. It also alerts that client as to the 1099 income they're going to get have to declare in that year. You never want that to be a surprise, and it's very simple and easy to close a sale when they're able to see this all come together. Now, what about applications and forms? Well, we try to make it very easy. Certainly, you always have the backup of your folks at IAMS, but on our agent website, we have product toolkits set up for every product you're contracted for with us. And in those product toolkits, you really find everything you need to sell and market our products. We'll show you a few of those later, but one of them is the printable application and forms package. You'll answer a couple of quick questions, and it's automatically going to populate for you the forms that you need in your particular situation. It will also give you a set of instructions that tells you how to complete your app, how to get the app to us, and more importantly, and we'll talk more about this later, it's going to talk about our required point of sale underwriting interview. That means that as soon as you finish the app, you can pick up the phone, call with your client, our call center, and complete about a 12-minute interview where well over 90% of the time we're going to give you an immediate underwriting decision. Agents love that process, and again, I'll give you more details in a moment. In that product toolkit we talked about, where the printable forms package is, you'll also find a number of other great marketing tools out there. Our agent guides, our client brochures, our illustration or proposal software. We have letters, we have phone approaches, just a number of great things. Take a look at that, and hopefully you'll find some tools that can help you. And I'm going to show you a few of those tools in just a minute. So now let's talk about the second product, and that's our single premium whole life product. A lot of similarities, but some differences that are key. The first difference of which is this is for clients who have funds not needed, again, for daily living, that are coming from after-tax cash vehicles, CDs, money markets, mutual funds, and where appropriate, 1035 life-to-life product exchanges. Same goal, client wants to increase their estate value, pass along a legacy to their family, but here's another difference, the issue age. The issue age for this product, because we're working with after-tax cash funds, is 50 to 85. Again, we have simplified underwriting, but for this product through 8 tables, we'll talk about that, as well as it offers automatically, again, in all states where it's approved, our accelerated death benefit rider. This accelerated death benefit rider has a little bit of a wrinkle to it where it has a little more flexibility to get money out, and I'll talk about that in a moment. So again, issue ages are 50 to 85 based on current age. 2 tiers of underwriting. So it's either non-tobacco or tobacco, level 1 or tier 1, which is standard through table 4, like what you have for Generation Legacy. But with this product, you have a second tier, and that's tables 5 through 8. So a client with a few more challenging health conditions would qualify. Minimum premium, it's only $5,000. How many prospects and clients that you work with have money in CDs making less than 1% at the bank, getting 1099 on that each year, and they've got their money siloed? Like, here's each CD for each of my children, my grandchildren, my great-grandchildren, my church, money I want to pass along for different reasons when I die. What if you went to one of these, 70-year-old prospects who was female and said, Mrs. Jones, would you be interested in buying some life insurance for your final expenses? And she says, well, James, I really don't need any life insurance. I have a burial account set up. Well, that means one of 2 things. She either has a pre-arrangement with the local funeral home, or she probably has a CD set up at the local bank with about $15,000 in it that her kids know that's the money set aside to bury her. Well, here's how that role play might work with the 70-year-old lady. Mrs. Jones, you're 70. You're going to live many more years, and costs are going to continue to go up for final expenses. What if I was able to show you a way to take that $15,000 you have in the CD now, again, making less than a point in interest, and you're getting taxed on it each year, and put that in a product like this that would provide your family with nearly a $25,000 income tax-free death benefit? Oh, by the way, if you became terminal in a nursing home or an extended care situation, you could get at some of that money as a living benefit to help with end-of-life expenses, and we could set it up that you still have some remaining life insurance for your family for the final expenses. Is that something that would interest you? That's called the burial account concept, and I can't tell you how many agents in this business get started selling single premium in that simple way. Once they figure out how good of a sale this is, they figure out quickly that to make the bigger sales with the higher premiums, you need to do good fact finds, and not only finding the money, the amount of money, but what the goal is with that money. The average premium we see for this product, by the way, is about $30,000 to $35,000, and again, for Generation Legacy, it was $60,000 to $65,000. Now, the maximum face amount for this product is expressed in terms of the maximum net amount at risk, and that's just simply the difference between the face amount we issue and the premium paid. The difference is that net amount at risk, and our software is designed to not let you violate those. Cash values, they accumulate in the product on a non-participating basis, but here's another difference: partial surrenders. Remember, again, we're working with after-tax cash dollars. So with this, we can do partial surrenders within limits starting in the second year at 10% of the available cash, 20% in year 3, 30% in year 4, 40% in year 5, and from the 6th year on, 100% of the available cash value can be taken as a partial surrender. Loans, they're available at any time. Not sure why you would take a loan when you have such liberal partial surrenders. So now let's talk about that accelerated death benefit rider. Very similar to Generation Legacy, the same 3 health event triggers are included as a single rider in this product, but it does increase liquidity. The benefit is paid out once, and again, it's paid out in a lump sum, and these are unrestricted funds. But here's the differences. If a client says to you, James, I'm really not interested in life insurance anymore, give me as much money as possible that I can get now as a living benefit. We call that a full acceleration. I'll tell you how that works. The second client may say, James, I got a $100,000 face amount. I'd like to get some in cash now and have some for a life insurance benefit. So out of that 100, we can do a partial acceleration, keeping $25,000 as a paid up policy, and take the other $75,000 in the original face and accelerate it at a certain percentage, and I'll show you how that works. That's a partial acceleration. So let's look at those examples. Terminal illness, it's the same definition to qualify as I gave you before, but now if the client wants to do a full acceleration, they do it at 95% of the face, less a $250 admin charge. Now, I will tell you, if you're new to this type of a rider and you're saying, well, what happened to the 5%? Well, any company who's going to pay out money up to roughly 12 months, how we calculate, in advance of death, there's a cost to do that, and that's what that 5% is. For qualified nursing, because they're going to live a little longer, same definition of qualify, but the maximum accelerated rate is now at 90%, less the $250 admin charge. And for extended care, home health care, and adult daycare situations, because their life expectancy is longer yet, the maximum accelerated rate is 80% less the $250 charge. Now, again, in all three of these examples, if the client says, give me a certain amount of paid up and I'll accelerate the balance of these percentages, we can do that. That's a partial acceleration. A lot of flexibility there. Definition of chronic illness, same as I gave you before, 2 out of 6 activities of daily living, or a client suffering from a severe organic mental illness, either get you qualified for the nursing home or extended care situations. So now let's look at these premiums to death benefits. And I want you again to start thinking about, in your mind, that prospect list. The people that you've seen or could go see, or clients that you have who have those CDs, money markets, mutual funds, paid up life policies, whatever, that are perfect prospects. At $50,000 in premium for a 65-year-old, the male at the standard through table 4 underwriting level would issue a face of nearly $82,000. For the female, same underwriting table, would issue a face amount of nearly $93,000. But let's not forget, with this product, you have that second level or tier of underwriting, table 5 through 8 risk. The difference in level 1 to level 2 at all ages and genders is only about $5,000 to $6,000 less than the tier 1 underwriting. So it's not a bad reduction to get that second tier of underwriting if the client still qualifies for the product. So, oops, what did you just do, by the way, for that female 65 who, remember, had 50 grand in a savings account or CD, making less than 1% in interest, and it's getting taxed on it? Well, at issue, you increased her estate by nearly $43,000. I mean, she's loving you now. And we're going to assume she was making 3% on the money in a 25% tax bracket. It would take her 28 years just to accumulate the nearly $43,000 you increased her estate by at issue. Don't forget that 93 grand of death benefit is paid income tax free. So the 70-year-old example, a little older, numbers still look good. At $50,000 in single premium, the male would get a face amount issue of nearly $74,000. The female a face of over $82,000. And again, for that second tier of underwriting, it's only about $5,000 to $6,000 less. So at 70, you're helping a senior increase their estate by almost $24,000 if they're a male, and over $32,000 if they're female. Not a bad deal. Again, seniors love this concept. So many seniors that you know and I know try to set up those little CDs for their kids and grandkids. Wow, when you show them this, their eyes are going to open. And again, referrals come early and often. Same story on forms. Go to the application and forms package in our product toolkit and get all your forms. And again, we have great marketing materials, and I'll talk about some of these. So now let's get to that point of sale underwriting. Here's the situation where the client says, okay, we finished the app. Now, when am I going to know if I'm approved? Well, if it's call center hours, you're going to pick up the phone, call our call center with your client there. We're going to complete about a 12-minute interview and give you an underwriting decision, well over 90% of the time. All we do is, in that paper app you complete it and you're going to submit to us, we're going to re-ask those health questions, but we're also going to be looking at, with the client's permission, the data from the Medical Information Bureau and the Prescription Drug Database. That way, if there's anything out there that's different from what the app reflects, we can get it clarified and get an underwriting decision made. When the interview is completed, any underwriting decision is given to you, not your client. You're the one that's going to be giving the underwriting decision to the client, no matter whether the interview happens with you on the phone or without you on the phone. If we call the client direct because you schedule it that way, we're not going to give them the underwriting decision. We're going to outbound and call you to give it to you. We're also going to give you a confirmation number that we ask you to write on the app for the call. So what about the call center details? All this information about the interview is in our app package. It'll be printed out. You won't have to remember this stuff. So the phone number to the call center is 888-368-9678. The hours are 9 a.m. to 10:30 p.m. Monday through Thursday, and 9 a.m. to 6 p.m. on Fridays. These are all Eastern times. We do support English and Spanish languages. Other languages are available upon request. If you have a hearing impaired client, we have TTY services in English and Spanish. Please know, though, that this interview must be completed within 5 days of completing your app. So, options. You can either pick up the phone and call during call center hours, get everything done at the same time. You and your client are on the phone together. It's great. But if you're selling an app on a Saturday or after hours, you might say, well, what do I do then? Well, if the call center is closed, you still want to call the call center. When you get the voice cue, you want to leave your name and number, your client's name and number, and a date and time you want us to call them. All right, and we'll pick up the phone, call the client at that time, and get the underwriting interview done, and then call you back with the decision that you're going to relay to the client. So it works extremely well. These are our two biggest selling products, and agents love this point of sale process. So how do you pre-qualify an app? We have two apps, one for each product, and the reason we do, for Generation Legacy, we have one set of medical questions because we have a one tier of underwriting. Standard through table 4. So for the Part A medical questions, think of it as knockouts. If you get a yes to Part A, it means your client does not qualify through 4 tables. If it's all no, MIB and drug history, height and weight look good, we're going to issue the Generation Legacy product. For single premium whole life, we have a 2-tier product, so we have 2 sections of medical questions, a Part A and B. Think of your Part A as knockouts. If you get a yes again to Part A, it means your client's not qualifying through 8 tables of underwriting. But if you're all no in Parts A and B, we're going to issue Tier 1. If you're all no in Part A, but a yes, one yes in Part B, with everything else looking good, we're going to issue Tier 2. So with that, I'm going to finish the presentation today by giving you a few sales ideas with and some marketing support that we have for you. So we've been talking about the agent website, right? And this is a screenshot of the first page, the home page of our agent website, with the top of the page being those product toolkits, all the colored boxes. And when you open, let's say, the Generation Legacy toolkit, this is what it looks like. And we just have a lot of great stuff that can help you. The application and forms package and many other things. Let's talk about what I think is probably the biggest thing you're going to love, and that's our mobile link software. Write this one down. It's mobile.baltlife.com. You can get to this web address anytime on your smartphone, smart tablet, anything connected. And if you're on your smartphone, click the shortcut that allows you to save this as an icon on your phone, and now you'll open it just like any other app. Once you've got Mobile Link loaded there on your phone, you basically have an interactive agent guide in the palm of your hand. You'll be able to review the product information, the underwriting guidelines, and have a rate and value calculator to quickly calculate the numbers you need. These are non-illustrated products, so you don't need a signed illustration. Mobile Link is really all you'll need to get it done. We have point-of-sale presentation software out there where you can do point-of-sale presentations. And what you're going to find, let me just go back here for a second, I'm sorry. Oops, that's not what I wanted. Let me go forward here real quick. Point-of-sale presentations where you can do a point-of-sale presentation with your client. This happens to be one with our Generation Legacy software. We have software called Secure Solutions Presenter. You can download that to your laptop and have presentations for any of our products and some other financial concepts. I think you'll like the point of sale presentation, simply because if the client understand the concept before you present an illustration. The other thing, I got a mic open, I think, on the other end. The other thing that I wanted to show you is the fact-finding tools. We talked about the importance of fact-finding. This is something that could help you, and it's called the Asset Transfer Analysis Form. One here in the middle, you can collect the client's current assets, CDs, money markets, annuities, and show them that if they transfer a portion of those funds into one of these products, the impact that'll make on their estate value. The bottom of the form allows you to record the client's current income, so you're sure they have enough monthly income before you start playing with their funds. And at the top of the form, you have some key dialoguing questions, such as, Mrs. Jones, do you have money that you'd like to leave behind for your family or favorite charities that's really not needed for your daily living? This screen that I'm showing you now are a series of sales ideas that on the document, single premium sales ideas, these are explained in full. This sheet will really help you start to understand and think about who are the people I can go out and see immediately with these concepts. What about those clients who have annuities? We talked about them, perfect prospects for generation legacy. What about some of the people that have old paid up life policies with at least $5,000 of cash value? You can 1035 exchange those into our single premium whole life product. You have some of the old UL policies where they're imploding. They need to be rescued. Again, if you have $5,000 in cash, you can 1035 that into single premium whole life. And then I gave you the examples on the burial account concept. So there's many other ideas out there for you to work with. Starting to wrap up here, customizable marketing flyers explains the concepts of asset transfer, features and benefits of the solution, and then you can customize these with your contact information and print them right off of our site. Great handout tools, mailer tools, whatever you need it for. We have this spreadsheet that you can download through Excel when you have the client who says, wouldn't I just put that money in a CD for my grandkids and set up multiple CDs? Well, you can show them that by putting that in a CD, what the after-tax net result would be versus if you bought the single premium whole life product and the advantage to their heirs through that bump they get in the single premium concept. We have print ads. We have letters, we have phone scripts, we have third-party articles and white papers. All this can be found out on our agent website, again, in the product toolkits. Now, my last slide, James, is to just to promote a trip that, you know, in addition to qualifying for the great IAMS trips, if you qualify for theirs and you're writing Baltimore Life business, you're probably going to qualify for ours as well. Our trip for 2019, based on 2018 production, is to the beautiful island in the Caribbean of Aruba. Great resort, the Marriott Resort and Solaris Casino. June 5th through the 9th, and in order to qualify for that trip, all you need is $600,000 in single premium business. When you look at the average premiums we see, it doesn't take many cases to get you there. So you can get more information on the trip on our agent website, or again, by picking up the phone and calling your partners at IAMS. So with that, James, I'm going to pass it back to you. And again, I want to thank everyone again, not only for participating today, but more importantly, for considering Baltimore Life for your business.
Gary, thank you so much. I'm going to go ahead and take over control here, everyone. Again, Gary, thank you so much. As you all can see, very, very powerful product, can be used in a lot of different settings with your clients. You know, I encourage each of you, you know, at the end of this to take just a few minutes before you get back to your day and try and think of 5 clients that you know that would be interested in sitting down and having a discussion on this product. As Gary mentioned, a lot of different opportunities to work with individuals, you know, old whole life policies that are paid up, UL policies that are imploding, money sitting in CDs, or even cash accounts. So several different opportunities to fund this product where you're getting a great return and maximizing those dollars on a tax favored basis. Again, I want to thank you all for your time. There were a couple questions. I'll go ahead and follow up with you individually on those questions. We'll also have a recording of this will be available. I can get that to you as well a little bit later this afternoon. Otherwise, feel free to check out our website, IAMS Inc., IAMSINC.com. If you click on the training tab under webinars, you'll not only see this one, but other webinars that we've hosted in the past. Again, thank you all so much for your time. If we can be of assistance, please give us a call, 800-255-5055.